Good day, everyone, and welcome to today's webinar, Naked Candlestick Trading. So today we will show you some techniques to actually use this naked candlestick trading, and some parts that I will show you today were a part of my practical naked trading course. So that I did like 5, 6 years ago, and effectively you can use this naked candlestick trading in your own system, maybe for additional confirmation or a confluence. But as you know, I'm a big fan of price action, so this should be very useful to you, no matter if you are actually experienced or maybe a novice trader. Okay, so Chris is also with me, and when I finish my part, he will also join and show you also his techniques for naked candlestick trading. So before we begin, just a quick introduction. This is me and this is Chris, and this is Admiral Markets webinar. And there is a disclaimer. Now that is saying that Forex trading and CFDR leveraged products can result in losses that exceed your deposits. So this video is not part of the .co.uk website, but the globalnews.com website. Please read the full risk disclosure on this web address. Okay, so without further ado, let's get straight to the point. Before you actually delve into the naked candlestick, we need to define what a trend is, okay? So a trend is simply a series of higher highs or lower lows. Now, when we define a trend, the trend can either be uptrend or downtrend. There is no sideways trend because sideways is just a ranging market. It's not a trend. Trend is very straightforward. It can be either up or down. So when you see a trend, you need to see a price action that is actually representing that trend. So in uptrend, you have a series of higher highs and higher lows, while in downtrend, you actually have a series of lower highs and lower lows. Okay, so this is basically trust pullback movement. So when you see the market going up, okay, then you know that something is happening. You need to see a pullback before you can assume that actually trend is in shape, because only one leg to the upside or downside is not enough to define a trend, because if this is a start of movement, next leg can be this, and the market can be actually trapped into the sideways chop. I don't like to see sideways chop, especially because that is the time when we might start losing our pips, and it's not good for general trend trading assessment. But you need to define also trust and pullback. Of course, candlesticks can also help us define whether there is a potential for a breakout or it's just a sideways chop. This is now a good representation of, let's say, trend. And as I said in the previous slide, it's always in the trend you have smaller trends. So within any trend, there will be always smaller trends. And this is the case. Clearly, trend is defined by trend lines. But even in this trend, okay, you have mini trend that is actually called retracement. So this day, particularly here, this is box indicator. You can get it if you don't have it. It's elite currency box indicator. So it actually shows you what was the trend for that day. So here, when the box is blue, we have uptrend. When the box is yellow, let's say yellow, we have a downtrend. But that is just for a day. Generally, this is uptrend and this is retracement. So when you see that price is making higher highs, okay, and lower highs, it's an uptrend. This is just a part of the trend for that day that was actually a retracement. But general trend here is very bullish, and you can see this also from price action. Have in mind when you see this, this is not a trend, guys. This is called direct spike or direct jump. Usually direct jump is reflected when there is some big news in the market, and investors usually pour the money into the market, giving it a spike, or maybe they're also covering. In this example here, we see a big spike that also was probably caused by short covering that a lot of investors actually took their short positions off, and the price continued to go up. But this is actually good for our lesson today, because all of these things that I'm talking about now actually can be easily seen with candlesticks. And of course, you need a series of candlesticks to actually define a trend. But either way, it should not be hard even for a novice trader to understand the basics. You just need to have a sharp eye on that, and you can get it by screening time. Here, for example, we have a downtrend, and good example of this downtrend is when price actually is making. Okay, watch this. This is downtrend when price is making lower lows and lower highs. First, we had a trend line break, and then we had two strong Marubozu candles that actually were the first leg of this downtrend. Now, guys, this is a quick tip for you. If you see a trend line break followed by strong Marubozu candles, usually that is a new trend. Now listen to me very carefully, guys. Okay. When are you losing the money in forex market if you're doing correct money management? So the first thing, if everything is correct, if everything is fine, guys, the only way where let's say, lose the money in forex, or where probably experienced traders also lose money, is trend change. Now I'm saying this, guys, I will repeat this 100 times if it's needed. It's normal. Losses are normal in forex trading, and for me at least, and I have a big experience in trading, the losses usually come when there is a transition of the trend. So when there is a trend shift from an uptrend to downtrend, or downtrend to uptrend. So let's say, guys, that this was uptrend here. Okay, this was uptrend, right? But how come you could have known, if you opened a long position, that the trend will actually change? Now this is completely different picture here. Okay, so the big thing here, guys, is that you know that you probably will lose the money when there is transition between trends. So once more, if I know that this is actually an uptrend, and let's say that I have defined my POC zone here, the zone could actually give, usually 90% of the time, it gives a small rejection before actually it goes down. But now this is different story. Now we know that this is downtrend in place. So usually, guys, when you see big Marubozu candles breaking through the trend line, you might expect a trend shift. That is why my first trade that I make is usually with a very low risk. So let's say that I have defined my risk with 2 lots maximum per day. My first trade will be 0.50 lots, because if I lose this trade, I will get into this breakout with 0.30 lots. Okay, it's called imbalance trading. Some people might call it imbalance hedging, but this is not imbalance hedging, because we have actually closed our position and reverse trade with 0.30 lots. It's not martingale, okay? It's just a money management that gives me very good and very consistent profits in forex trading, and generally in forex market. Now the biggest problem is if we get into the over leverage mode. Now if we make, instead of 2 lots, if we make 4 lots, so we actually kept on adding and kept on losing, we might lose more than 10-15% or 60% in the account, and then it's much harder to recover. So what I advise you, now this is slightly off topic but still in the trend concept, if you take trades, guys, your first trade should be with lower leverage, and then you can add a little bit more, of course, providing that you have the margin for that. Let's say, again, 2 lots trade. Let's say that my 2 lot risk is 3% per day. So I might get 0.50 lots, 0.30 lots, up to 2 lots. If I cross this line, then it means that I don't respect my own plan and my own money management. Okay, so when you see big Marubozu candles breaking through trend lines, you can expect a probable continuation of the price. Trend principle. What is, guys, a trend principle? Simply a series of higher lows, downtrend is lower highs and lower lows, uptrend is higher lows and higher highs. And just place a trend line and watch how it goes. This is strong downtrend, this is sideways chop, this is weak downtrend, this is very strong downtrend. And usually all of these market movements are defined by trend line breaks, and or moving averages. Okay, that's also very important to know. Now, don't forget, trend is your friend. So trend is created by market movers. When you go with naked candlestick trading, usually, guys, you want to follow the trend. Okay, so when you go with naked candlestick trading, you want to follow the trend. Why? Because if this is a simple trend line, okay, I cannot draw it now perfectly, but let's say that this is a trend line. You can imagine it. It's freehand drawing, so I'm not very good at it. So imagine this is a trend line. Now, guys, if you know that this is trend line, which kind of trades you would like to take here? Of course, short trades. Okay, so in a downtrend, you should watch for reversal candlestick patterns and or bearish configuration of candlesticks. We already covered bullish and bearish candlesticks. You can also read on Admiral Markets blog. Okay, but in this webinar, I will show you also important price patterns that maybe are a little bit more, maybe they happen a little bit more in Forex market, maybe more than in stock markets or let's say equity markets. So yeah, because Forex market, guys, is a little bit specific. It's not like you can always trade the same thing and expect results. I mean, there is always some kind of tests, retest, or eventually you might see some bullish and bearish movement in the same day that is reflected also on the chart using candlestick pattern configuration. So this is very, very important, guys, for you to understand. Now, trend is your friend because the trend is created by market movers. Who can make the money move? Well, big players, big institutional money, smart money, big pension funds, hedge funds, and a lot of different market movers that we already covered in our webinars. Who moves and who actually can move markets. Now, the biggest problem with naked candlestick trading is it's very, very hard to tell for the unexperienced guys which kind of candlestick that is or what is actually a good trend line. But my personal opinion only is you just keep on. Guys, you need to have a good screening time. When I started to trade, I usually was, guys, I was literally spending 12 hours or even more per day just watching the charts. And I went through all of candlestick, Steve Nissen candlestick course. That is when I started the trade. It was like 2007. And then I actually entered the market with live account. When I burned my first account, I did demo trading for 1 year. And when I was successful in demo trading, because I traded demo trading as if it were live account, that is when I actually went live. And you know, it's been a big journey for me. So all of these candlesticks that Steve was talking about and that I also show you as my personal candlestick pattern, including T89 pattern, Levez zone, low volatility zone, Marubozu, high volatility trading, that is very practical in the market, and it just can help you to make better trading decisions. So the point is, you don't need to trade, guys, if you not feel comfortable naked. But you can use this candlestick pattern to further stack the odds into your favor, because trading is stacking odds into your favor, guys. That is what trading is about. You need to have higher probabilities to have high winning trades. Even though if you're low, if your accuracy is not that high, by applying good money management, you still can be successful in trading. Now, trend is always buy lower, sell higher, while the price follows trend pattern. So guys, remember, always when trend is up, you want the price to be oversold. When trend is down, you want the price to be overbought. So you want to buy lower and sell higher. Other than that, it's completely wrong unless you want to do a breakout scalp trade. Let's say high or low for today is broken, then guys, you might go in a scalp trade, but that is basically very, very fast scalp, because guys, when high of the day, let's say, is broken, there are some sellers here. Usually sellers place their stop losses there, and usually these stop losses are collected fast, in a fast way, and that can give you instantly 10 to 20 pips. But that is not, it's not positional trading. It's not intraday positional. It's completely different kind of trading. Don't forget, I always mention this on live seminars and on these internet webinars. Smart money is the shark. You're the fish. So you want to follow the shark. You cannot fight the shark. It's nonsense, guys. Imagine that you are a novice, let's say, boxer, and you should fight with Mike Tyson in his best days. Or it's completely, it's a nonsense, because you will get knocked out in the first second or the second. That happens in forex market and in financial markets too. You really want to fight with market, you will never win, guys. Remember what I'm saying. You will never win. The only thing is to follow big guys, big money. Okay, so that is why we use trend. Whoever tells you differently, tell them to show you my FX book live and prove that I'm wrong. Unless they are trading with algos and expert advisors, but it's not trading, it's money management. Algos and expert advisors that do high frequency trading are doing optimized money management. Manual traders, in most times, money is made by following trend most of the time, and that is the fact. At least that is how I do it. When I go counter trend, it's usually it can be good risk to reward, but it's not a big amount of pips. Indeed, guys. So just think what I'm talking about, and don't think that you can fight the market. No one can do that. Big guys are following it, and big guys shape the market. Pin bar, bullish pin bar tail is spinning down, rejecting the support, and we see now momentum buyers. This is one of my favorite candlestick patterns. One of the secrets of my success in forex market and trading is using these pin bars. Pin bars tell you now moment perspective. When you compare it to historical perspective, that means that if let's say buyers were at the same spot in history, okay, it means that you still have bigger chance for success. Odds are definitely into your favor. So if this is a pin bar in now moment, just look at your left, to your left on the chart, and if you see that there were buyers in the history, well, you have like 10% more chance to win the trade. Similar for bearish pin bar, especially, guys, if those pins are actually rejecting from resistance or support. That is what happens in trading. The bigger the time frame, okay, the stronger the pin bar is. Really one of my favorite patterns, and this is a basis for T89 pattern. Now, this is called three soldiers retest. Okay, so let's say we have bullish three soldier. Okay, so first candle closes up, second candle shows equal low or higher low and higher high, and closes either bullish or bearish. You need to watch the wicks. Third candle breaks the low of the candle, okay, and above. Okay, this looks confusing, but I will just watch this picture, okay? So let's say that we had 3 bullish candles. This is the first bullish candle. Watch this, guys. There are 2 pin bars. This is important. Don't watch this body here. This is important. Okay, so these are buyers there. Okay. Now, if this candle breaks, okay, to the upside, this is continuation trade. Either this can fool you up, okay? This candle close here, that can be bearish. That is why I don't watch bodies too much. I'm very focused on wicks. See this? Someone might tell you, okay, this is very bearish. But this is not bearish, guys. When you see this, this is not bearish. This is completely bullish most of the time. Now, I'm really talking from the perspective of higher time frames, let's say 4-hour time frame. On 1 minute time frame, it can be negligible because price might move 2 or 3 pips and then reverse. But on higher time frames, it's much more significant, guys. So first candle is bullish, second candle, watch this, pin bar. Third candle has a low here, okay, but it's still bullish, and next candle break. So you just put pending order here. Well, what can happen is that you cannot spot it that easily, but if you have a good screening time and if you are active trader, this cannot be done with traders who have, let's say, who don't have a lot of time to at least watch the chart once in 4 hours. But for traders who have the time to actually look for this kind of configuration, it's very, very, can be very profitable. But the biggest problem is waiting when this will happen. But if this happens, usually it's a sure trade. Same with bearish. First candle is big bearish candlestick. Big bearish. Second candle has a big wick to the upside, but next candle has even bigger wick to the upside. Okay, so just put a pending order here. And we actually wait. So when you see 3 soldiers retest, okay, you can hope that the price, that you will actually see this pattern. And when you see this pattern, just put a pending order and wait. Now, this is called advanced block. Also, guys, these kind of candlestick patterns are not that often seen, but because of their rarity, they are actually more profitable. You know, it's always like that. When something is not that common, if you spot it, you can make more than from common candlestick patterns. Advanced block is actually bullish candlestick pattern, and it's a continuation pattern that has 3 candlesticks, 3 candlesticks that can go that should go in north direction. The problem with this is shadows. Sometimes, guys, you can also see something similar to this, and it still can be qualified as advanced block. But for the best advanced block pattern, you should not see any, or at least very, very small wicks. When you see this, you put actually a pending order here, and usually this is what happens. As I say, this is not very common, but once more, if you spot it anytime, that can be also a sure win. Next one is so-called price ladder. This is a 4 to 5. I'm not sure that Mr. Steve Nissen actually talked about this, but and I don't know if this was originally his pattern, but I know for this pattern a long time ago, and this is very, very, I need to say, it can be confusing because it's actually reversal pattern. So it's a 4 to 5 candlestick pattern, and for bullish reversal, price first needs to go down. So first candles, usually first candlesticks are bearish like this. You have 3 big candlesticks, but suddenly, okay, even this candlestick is bearish. Watch this wick. But the 5th candlestick here is very bullish. So now you might think where this will go. Well, usually, guys, if this is actually the case, just put a pending order here. Okay, and you see what happened. Price went up in a drawdown and went higher to the upside. This is a fake candlestick pattern. I mean, this candlestick pattern can fake you out. Usually, if you follow simple three candlestick pattern, in this case, it might not be enough because a lot of traders, especially traders who don't have experience with candlesticks, might be confused and think that these are actually similar to three crows, bearish candlestick pattern. But this is what it reveals its true nature. The fourth candlestick is actually, you see, guys, it's a fake because it is bearish, but it didn't break through this low. You usually trade candlestick patterns not when they are closed, but rather when high or low is actually broken. Do you see, guys, this price ladder here? Yeah, Digis is saying the block is now visible on New Zealand dollar. Price ladder is forming on euro dollar now. Yeah, I will take a look at this. But please, guys, bear with me now. I really need to explain you this. Okay, so if you see this pattern, okay, don't trade immediately. This can be confused with, this looks similar to bearish three crows. But remember this, candlestick patterns are traded not when they are closed. Next candlestick should either break its high or low. Because guys, if let's say candlestick doesn't break its high or low, it can be another candlestick pattern. So it can actually it can morph into the other candlestick pattern. And that can be very, very dangerous and confusing to many traders. So you really need to treat these candlestick patterns completely. They need to have a shape. So always wait for a break of the prominent swing high or low of the candlestick to enter the market. In this example, this is the swing high where you enter the market. In this example, this is the swing low. So the price should break it by 2 pips, including spread, guys. Don't forget to include the spread. Advanced block, also, it needs to break this candlestick high. And price ladder, it needs to break the fifth candle. Now, if we see a three candlestick, usually this is 5 candlestick pattern. Ideally, this is the example. But let's say that you have 3 bearish candlesticks and next candlestick is big bullish. So this is still price ladder. And you actually take your trade from this point. It's just vice versa for candlesticks that are actually bullish. Okay, now I will show you basically an example how you might try to trade with multiple time frame. It's part of naked scalping course, and maybe you should try to use this. It's very straightforward. And the principle is it's TOTH trading. It means that you can trade at the top of the hour. So very straightforward, guys. 1 hour, 30 minutes, 15 minutes, and 5 minutes need to close as bullish candles. So you need to watch 5-minute candle. When the 5-minute candle is closed, guys, then you need actually to wait for the 2 pips breakout of the high in order to make a buy entry. So 5-minute, 15-minute, 30-minute, 1 hour. Everything needs to be aligned. When everything is aligned, go 2 pips high above the closed plasma spread for buy entry. 1 hour chart, okay, same thing, guys. Okay, bullish candle, M30 bullish, M15 bullish, M5 bullish. I will show you this on real chart. Candle should be bullish, or at least 2 candlestick bullish pattern. Pin bar rejection, Marubozu, hammers, and golfers, inside bars. That's even better. So this is, let's say, example. 1 hour candle bullish, 30-minute bullish, 15-minute bullish, 5-minute bullish. You enter here. Okay. Now let's skip to chart, and this I will show you the examples, and I will refer to New Zealand dollar and euro dollar price ladder, and then I will hand over to Chris. Okay, so let's use euro dollar for, doesn't matter, euro dollar is slow today, but yeah, this is good example. Pound yen. Now this is news, guys, but watch this. Let's use this example. Okay, so 1 hour was bullish, 30-minute was bullish, 15-minute was very bullish. Wow, this is really going to the upside. This is some strong news, guys, here. Yeah, watch this, guys. Yeah, I'm watching the price. This is very strong. Watch this reversal here. Do you see this? You should be seeing this. Okay, you see? So once more, 1 hour bullish. I will zoom it in. Here, bullish. 30-minute, bullish. 15-minute, bullish. 5-minute, bullish. And when price breaks this high, you go long. This can be very, very good way to actually trade the markets when you're not sure where to place your trades. Try this, guys, and yeah, you should get some nice pips out of this. This can be some nice ways to join the momentum, guys, because momentum is actually when you scalp. You need momentum for that. For bearish trading, first candlestick, let's say 1 hour is bearish, M30 should be bearish, 15 minutes should be bearish, 5 minutes should be bearish. And when price breaks the low, bang, you just go down. You just place a short trade. So stop loss is placed for short trades 5 pips above this candlestick high for short trades, and for long trades, guys, the stop loss goes 5 pips below 1 hour candle. So 1 hour candles, and your next profit targets are defined by previous swings. So let's say that we got into bullish trade here. My first profit target would be obviously here. For short trades, let's say we got into a short trade here. My first target would be here. We need to look to the left, okay? And yes, if you cannot see it on 1 hour time frame, zoom into 4 hour time frame and just go with swings. This is scalping system. So guys, you need to treat it as scalping. It's not positional trading. I hope that you enjoyed. Now I will hand over webinar to Chris. And if you have any questions, guys, or problems regarding this, please ask me. I will be more than glad to help you out. Thank you. And I hope to see you soon on live trading webinars next week. Cheers, everyone, guys. Trade safe.
Great stuff, Nanda. Thank you so much. And I'll continue now with taking a look at my slides. Let me just quickly show you, first of all. Let's see, I'm trying to get the screen. There we go. Soon you should be able to see my, there we go. You should be able to see it now. So Candlestick, basically the way I use it, I'm looking at just, in general speaking, I'm looking at candle size, candle wicks and closes, indeed candlestick patterns, but also what is the spot of the candle within the bigger market structure. So we're going to break these few things down and then take a look at some live examples. So now it's not necessarily that I'm looking at every single candle, what is the candle size. I mean, there are tons of 5-minute candles on so many instruments that, of course, that's not what I mean. But for a daily candle, yes, most of the time a daily candle is always interesting to take a look at these aspects, right? To get that info, to understand what is the sentiment behind that candle. For lower time frames, it's probably best to look at the spot in the chart and find spots that are interesting, whether they're looking at breakouts, whether they're looking at some pattern, break, or bounce, whether you're approaching some support or resistance level that's of interest, if you're looking at some trend channel. So it makes sense to find some reason why a particular candlestick would be interesting to review. So it depends on the time frames we're looking at, whether it makes sense to look just at the candlestick or a group of candlesticks. Higher time frames, it always has some good info. On lower time frames, the context is useful and important. So let's dive into the candle size first of all. So it's all about relative size of the time frame and of the currency pair. The euro pound 1 hour chart is not going to have the same candle sizes as the pound yen 1 hour chart because the pound yen just moves a lot more. The average candle size on the pound yen is going to be maybe 50, 60 pips, a lot bigger. 40 euro pound could be 8 pips. There could be massive differences. The way I do it is just visually looking at the group of candles that you see near it on the chart. And if it's a small candle, then I am not that interested in it. It doesn't mean much to me. It's indecision. A small candle just means low volatility, doesn't mean that there was means that there was not much participation of the market in that particular time frame. Therefore, I don't think there is much value or information to be gathered from such a small candle. What I want to see is a normal, or even better, a large size candle. So the larger, in fact, probably the more information on average. For instance, if there's an NFP day and that particular daily candle is never small on average, is always average or bigger. So that has good info for us. That information from that daily candle is important. So, but any smaller candle is just not so important. It's very simple to measure it. Just take the candle high minus the low, and that's the size. But more importantly is the relative size to other candles. So these candles right here are not so important. These are just indecision candles, small candles. More important are these bearish candles. They have good size candles, right? So those are important candles and they indicate bearishness. But more on that here. Candle wicks or candle closes, right, are important. Because if we have a candle wick, it is indicating weakness. Whereas if we have a candle close, either high or low, it is indicating strength. If it closes near the low, like this candle, it is indicating bearish strength. Whereas if it closes near the high, in this case, it is indicating bullish strength. So that gives a lot of info about what direction is that candle going to. So the candle size indicates if the candle is important or not. Whereas the close and the wick indicates what happened in that candle. So okay, it's an important candle, but what can we read from it? What kind of info can we get out of that candle? So the left candle indicates bearish strength. The right one indicates bullish strength, right? So what you want to do with wicks is how you measure it is you actually look at the data of this one candle and you take the high and the low to get the candle size. You take the close minus the low, all right, to get the wick at the bottom, and you divide this wick, the size of this wick, with the entire candle. So if this entire candle would be 50 pips and this wick is 5, then the wick is 10% of the candle, the downside wick. You can also measure this wick, of course. Maybe that's 15 pips. So you have a wick 15% of that top side. All right, what that means, how to interpret it, I will dive into the next slide. On the right, we have a small wick at the top, hardly anything, but we have a huge wick at the bottom. Right, so that's useful info. How? I'll discuss right now. Basically, my guidebook, my rule for interpreting closes and wicks. So if there is a close near the high like this, with a wick that is hardly existent, so it's something like 0 to 5% of the candle's wick, that's showing that the bulls were very much in control and dominated that candle. So that's indicating strength. So we know that the bulls are in charge. 5 to 10% is still excellent. 10 to 20 is good. 20 to 25% is okay. 25 to 35% is a question mark. Depends on the context more and more. 35 to 65 is indecision. And 65% or more indicates a reversal potential. All right, potential, not a guarantee. So looking at this right candle, we have 65% wick probably at the bottom, I would say, close to it, maybe 60, but it is reversal potential, plus a candle close near the high. So you can see what kind of information that candle gives. Two bullish clues, in fact. The one on the right, on the left, sorry, indicates just a good, bearish close, probably, I would say, around excellent or good. And yeah, that's about it. So, but, indicating bearish continuation or reversal, perhaps, depending on the context of the candles. So that's how we can use that information. So it also depends on the spot. So basically, you could, of course, just look at candlestick patterns as a standalone system. It is possible, better, usable on higher time frames than on lower time frames. I wouldn't recommend it on lower time frames, but on the daily, could be okay. It is possible, but I think always looking at the context is better. But basically, understanding when these candles appear in what part of the market structure is, I think, a better, as I said already, better way of approaching it. So you would want to take a look at what is the swing, what is the current swing, and is the bounce or break spot, for instance, right? Are there any particular candlestick patterns that are occurring? And are those candlestick patterns indicating the end or the start of a swing? So this is how you can use candlestick patterns within the larger chart analysis. So basically, when price is making a bullish momentum and it's approaching a resistance trend line, right, and it's trying to break out above that resistance, then a good candlestick that is breaking above that resistance trend line would indicate a breakout. So that could be a very useful breakout candle right there within the context of a bullish momentum, right, with a mild correction and a break above resistance. So this is how you, just an example, how you can use candles for basically bounce or break spots, and how you can basically use candles to understand corrections and momentums and when they start as well or end. All right, let's take a look at some live charts. Let me just double check if that was my last slide, but I do believe so. Yes. All right, so I'm gonna show you the charts, but basically the candles are really what guide me in my analysis. So I have analysis, but the candles are often what decide whether I take a trade or not. They're the confirmation that I'm looking for to trade. They basically indicate, they're kind of the last step before trading, right? So they could be also just a standalone analysis, right? Just looking at the daily chart candle gives a lot of info. But there's other analyses that I do that to help kind of get the context. And then again, the candlesticks become important when entering and exiting because they give direct information from what the market is doing. And that's so important because we might have an analysis and expect something to happen, but it's really, we need to really follow prices, and then it also indicates. And the best way to do that is really using candlesticks. So let's take a look at some examples. All right. So for instance, let's take a look at pound dollar. All right. So for instance, I was looking for regard to my analysis in a bounce in this 5061.8 zone with a resistance spot right here because of the momentum before that and the momentum after that. So there was resistance, there were fibs, and I was looking for a turn in that resistance zone, right? So how do I confirm that price is turning, right? I was waiting for engulfing twins in that zone. Oh, sorry. Thanks, Peter, for that. Appreciate it. So basically, resistance zone, fibs, and strong momentum. So I was looking for engulfing twins in that zone. So that's one way of looking for candlestick patterns to confirm the entry right there. All right, so now you should be able to see that. All right, now candlesticks are not everything, because as you can see, we got a strong continuation signal, but the market equally closed and reversed. So that's why I think context is important, because if you only look at candlestick patterns, I think you're still missing part of the equation. It is possible on higher time frames, because I know that traders do a decent job just blindly looking at that. But I think if you do combine it, I think it's a stronger combination. That's just my 2 cents. All right. So let's take a look at your dollar daily chart. All right. So we had pin bar at the 23.6 fib and 117 support, for instance. So this is a good signal. We have a wick at the bottom, we have a candle closing the low, but if you look at the context as well, it makes it even better. 117 support that was tested several times but not broken, a falling wedge. So these are all kind of extra tools that I think the 23.6 fib that make that particular candlestick pattern, the pin bar, the bullish wick, and the bullish close even better. They only support that particular analysis. So let's take a look at candlestick patterns where it didn't help that much. Peter, for instance, asked me about pound odd yesterday, and that didn't go up yesterday, in fact, although we had a good 4-hour candle. Somehow I must have, let me scroll to the right here, because I don't see the pound odd somehow. I think I deleted it yesterday in the live analysis by accident. Yep, there we go. All right. So yesterday I was looking at potential ABC like this for a bigger ABC like this, and I was looking for a bullish candle, or on the hourly chart, I was saying some kind of flag and a break. So this is when sometimes patterns help, because we didn't get the break. We got, well, we did get a break, but we got a break to the downside rather than a break to the upside. But the candlestick pattern itself, right, actually there was a bullish candle, right? Some doji, some indecision, and then a failure to breaking this low instead and moving lower. So in some cases, obviously this is unavoidable. This is going to happen sometimes, and you know the supportive resistance works out differently. The R1 held for a second time, stuff like that. Those things do happen. But generally speaking, combining candlestick patterns, candles, with market structure, with understanding the flow of patterns and trend and supportive resistance, provides with more context and more understanding than just looking for particular sequences. But as I said, there are some exceptions to that, and Nennet was looking at a great combination of 1 hour, 30, 15, 5 minutes at the end. So there are manual ways, let's say, or let's say, rules-based ways to tackle that as well. And that's great. Let's take a look at some other examples on some major, maybe what has been maybe of interest that we can take a look at. Maybe Euro pound. All right. So daily candles give us good info in general, right? So when we have a decent sized candle like this, and the close is near the high, and the size of the candle is not too small, it's just average or big, that's just in itself a continuation signal, right? So you can analyze each of these candles really on a daily chart, and it will give you good info. We can do that for almost each of these candles, unless it's a small candle. That's what candlestick analysis just generally could do for us. So here, for instance, we see bullish candlestick patterns indicating the bounce to the upside. Here we see the flow to the upside. We see a correction. So these small candles are not too variable, although the wicks here might indicate a bounce. And then we see strong continuation candles. So the context is there, but also this candle itself is indicating strength, right? So, and indeed, look at that. Now, not all of these candles are indicating continuation necessarily. Some of these smaller candles, right, might be, not providing much information. Even actually, this one might give a potential reversal, right? But then we see wicks at the bottom, kind of neglecting or counteracting against this particular candlestick, right? Invalidating that, not making it relevant, and indeed, price going up again. So not all of these candles are great continuation signals. This is a small candle. This is an average candle, these have some wicks, so that gives us some information that continuation is likely, right? And really the signal where we could say, okay, we got to be careful of upside, that upside is potentially finished, is, I would say, this one, right? Because even this is just a wick. It's not, I would say, it's a wick to be careful of, but not reversal necessarily. So we see that with this particular bearish candle, not only do we have a good strong bearish candle, but it could indicate the end of this swing. That particular candlestick pattern, the red arrow circle, could indicate that end of that swing. So each candle has, on this daily chart, has a certain, or many have a certain information, right? Within this swing, the bullish candles kind of normally confirm the continuation of this momentum. Smaller candles just indicate indecision or cautiousness, caution in general. Whereas this bearish candle not only indicates bearish strength, but also indicates the end of that swing and a potential new swing to the downside, right? So then we start to analyze these candles, and these are all good continuation signals. This is Doji's indecision, right? And engulfing twins, again, indicating downside and confirmation. These bullish candles, well, I would say caution, looking at lower time frames to see if there may be any patterns that could indicate up or downside. Smaller candles are less important, so this is probably less important. This is maybe the most dangerous bullish candle, reversal candle for upside, right? And it could still be a bull flag at that time, but that's adding some different analysis to it. But otherwise, after that strong bearish continuation, all of these candles showing closes in the low, showing mostly in the continuation, basically. We get a new lower low here. And that's when the environment starts to turn a bit again, because here we have bullish candles, first of all, but we never managed really to break this dominant candle still, right? Which is still the biggest candle in that row. It's a bit different when we get into here, when we have a lower low, but we have a close above the previous highs, breaking those resistances of the last 3 days. So these are all things you can read by just looking at candles and the formations and the sequences of that. And especially if you have a second bullish candle that's confirming it, I think that retracement, that this swing is finished and a new retracement swing is happening, right? So each of these, not each, but any decent sized bullish candle is a confirmation, which doesn't include this, but otherwise, yes. We were looking at the £0 live actually, and we're looking at it here on this candle. And I remember I was saying that we need a bullish close, and that if it does, there should be a continuation up to 89.25. I don't know what the target was, but anyhow, because this is showing bullish candles indicating momentum, indicating a continuation. So what would this mean? Well, if it closes anything like this, which we're not sure yet, we've got a couple of hours left, but yes, wick, yes, candle closing the low, yes, engulfing twins, yes, that would indicate potential downside, right? There's a good chance for that. So just by looking at daily candles, just by looking at the context of momentum, correction, the close, the candle size, close in relationship to the previous candles, you can get good info just by looking at the candles. But I do think that if you add extra context, it is better. And this is, of course, more valid for, as I said, the higher ones, the higher time frames. I think that lower time frames, even more context is needed. Does that make sense? Is there anything that is? Yeah, Angel. By the way, it is recorded. I now missed your question. Gold and pound yen. Let's take a look at that. Is that? I mean, does it make sense what I'm saying? Do you have any follow-up questions, perhaps? And of course, you can look at different time frames, different candles. I look at weekly, I look at the monthly candles, I look at the daily candles. Definitely good info there. Don't have to only look at daily. No, the candlestick patterns themselves, we're not going to go through in this particular webinar. We did have webinars in the past that went, diligently through all of those patterns. So the best is to go to our YouTube channel and look for those webinars. If you can't find them, send us an email and we'll find them for you. They were from a few years ago. And we went through in one webinar, we went through all bearish, and the other webinar, we went through all bullish ones. And, but yeah, candlestick, the patterns themselves is a question of training. And there's even an indicator I have. If you want, you can send me an email and I will send that to you. That helps you spot them. If you want some training in that. But besides, candlestick pattern is very valuable. But I think even if there's not a particular pattern available, just the candles themselves, give info, good info. So regarding gold, basically, at this moment, well, this was a strong bullish pin bar. We had a good wick. We had a good close, made a high. And all of these bullish candles, well, not all, this one is definitely confirming the upside. This one is indecision. And even this one is a little bit of indecision. But ultimately giving the benefit of the doubt to the upside because we have 3-4 bullish candles to the upside. So it is definitely not a reversal signal. It is more, these are indecision candles, but because of the context, I would include them in the continuation category for the moment, and definitely not any reversal signals. This was a reversal signal. This one, yes. This one, yes. Right. And there were some other potential reversal signals, right? So you got to always be careful of that. For instance, if we look at, let's see. So we got some good bearish continuation in this part. But if you look at these particular candles, especially this one, and I would say this one, you might expect some upside from that, right? But it didn't. The next day was bearish. So one of the things I look for is therefore also a confirmation candle after the bullish sorry, not necessarily bullish, confirmation candle after the reversal candle. That often seals the deal. And the context helps understand whether this is indeed a moment where price might make that bounce or not. Let's see. So trading it, basically, I wanted to add is, depending on what type of trader you are, but could sometimes simply be looking for a break of the low or a retracement of that candle. Those are typical things that could be traded. Trying to just trade the candle itself, within this momentum or within the reversal pattern, basically. Those are often the two choices, right? The reversal either of a trend or the reversal within a range, or the continuation of a particular momentum. Pound yen, let's take a last look at that. Alrighty. There we go. So bullish engulfing twins at the 50 fib, context, right? But also a good candlestick pattern, for instance, right? Engulfing twin right here, bullish candles before that, indicating upside, and looking at these bullish candles. Look at this, halfway retracement, no retracement here. There's a very minor retracement. If you're trading the daily chart, you might want to trade this one or maybe this one, but not maybe too far up here. But you can also use the info to look for longs in intraday trading. Let's say we see these bullish candles or this bullish candle in this day. You might want to think more about longs in intraday trading than shorts, right? So this is all useful info. It depends how you use it. Depends on what type of trader you are as well. I got one question from Roy. Yes, reversal candlestick patterns are not that simple, indeed. So I don't want to make it look like it is that simple. By coincidence, we looked at charts where we had quite some reversal patterns that looked pretty good. Yes, I agree with you that it is not that simple. It is. That's why I think context is important, especially for reversal candlestick patterns. And it is good to get more info from the chances of that reversal happening. Definitely, I definitely agree with that. All right, and it does depend on the time frame too. I think there is a bit more solid info on a daily, especially if the candle size is pretty good. Some other things that help with reversals is if you get good momentum, like good run like this, and you get a strong candlestick pattern like that, it's often a pin bar or something like that. You might see a good chance of some retracement at least. Reversal candlestick patterns may be where prices just like kind of like no kind of clear structure or something like that. That might be riskier in a way. Let's see if I have any tips that come to mind, but I think at that moment that is probably anything. That's all that pops in my mind for the moment. So yeah, the candlesticks are good info for like breaks of these bull flags, for instance, candlestick patterns, for bounces, for instance. Here we have a trend line like this. That's not what I wanted actually. So let's take a look at maybe some other example. Well, for instance, here price is testing this bottom. I remember this. We were talking about this live. So, these candlestick patterns are confirming the bounce, whereas here, these were confirming the breakout. So they really get some good context if you find a good point of confluence or a good decision zone. Then these candlestick patterns are really useful for confirmation as well. All right, so all in all, to summarize, candlesticks are great info for context, for trading purposes, trading breaks and bounces, for analysis / context, right? I just mentioned it. Either as a standalone on higher time frames or within the context of that larger, broader analysis. They give info about the continuation of a swing, whether it's corrective or impulsive, the end of a swing through candlestick patterns. So really a lot of useful information we can get of that, and it's really the decisive factor in what price is doing. So, I know that there are a lot of naked candlestick traders, and this webinar is about naked candlestick trading. And I think that you could get a lot of context even without anything on the chart, right? You don't just looking at it like this without any trend lines. Wait, let me quickly use my blank chart like this, right? And just looking at tops and bottoms and stuff like that, maybe drawing a trend line or something like that. That's possible. And there's a ton of value to get out of candlesticks. Personally, though, my own trading, I do use context. I do use tools to give me more of context and more analysis, more deeper analysis, and then use the candlesticks in various ways to confirm it, to understand the chart fuller and better. So that's my preference, right? So that's about it, I guess. Thanks for joining. We got more webinars with Admiral Markets next week. We'll be back soon. Looking forward to that. Wish you all good Friday. Be careful. Friday is always a more difficult day. Then a good weekend. And Monday, Tuesday, we'll be back. See you soon. Cheers.